So there have been a lot of rumors about Cathie Wood stocks doubling this year. Now, what's really in the pipeline for ARK Invest and their stocks, particularly Tesla stock? That's what we're about to figure out. Welcome back to Stacking Stocks and stay tuned. Now, many of you are familiar with Cathie Wood, the famed stock picker and founder of ARK Invest, who focuses on investing in disruptive tech stocks with enormous upside potential. Indeed, she's so famous that the stocks that she buys in her funds are often labeled as Cathie Wood stocks. We're talking about stocks like Coinbase, Roku, Square, Teladoc, and Tesla. You might also be familiar with how those Cathie Wood stocks have gone from Wall Street's biggest winners to its biggest losers over the past few years. During the pandemic, her stocks absolutely soared on the backs of consumers embracing disruptive new technologies and the Fed providing a wall of liquidity to incentivize risk-taking behavior in markets. Cathie's signature fund, the ARK Innovation ETF, skyrocketed an amazing 157% higher in 2020. It was an absolutely jaw-dropping performance, but stocks don't go up forever, and in 2021, Cathie Wood stocks stopped going up as consumers decreased usage of new technology platforms last year and red-hot inflation threatened valuations. By the end of the year, the ARK Innovation Exchange-Traded Fund, the same ETF that rose 157% in 2020, dropped 24% in 2021. That was an enormous reversal. But 2022 is the year of rebound in Cathie Wood stock. And now let's turn our attention to the stock that matters most, Tesla. Did you know that ARK Invest recently bought Tesla stock for the first time in 8 months? ARK Invest purchased 27,799 shares of Tesla in its flagship ARK ETF and purchased another 5,683 shares in its ARK W Next Generation Internet ETF. That comes after ARK consistently sold Tesla for months as it used the proceeds to buy other beaten-down stocks in its portfolio like Teladoc and Roku. So you might be wondering why the sudden change of heart. Cathie Wood likely saw a bargain after Tesla's post-earnings decline on January 27th. The drop wiped out $109 billion in Tesla's market value and brought the stock to just above its rising 200-day moving average. While Tesla beat analysts' expectations and guided for continued growth, the EV manufacturer said it would not introduce new models in 2022, such as its highly anticipated Roadster, the Cybertruck, and the Semi-Truck, and that it currently has no plans to develop a $25,000 electric vehicle. But those product delays aren't phasing Wood, as she sees Tesla still outpacing the competition. Tesla remains ARK Invest's top position, with a combined market value of $1.23 billion across all of ARK's ETFs, according to data compiled by Cathie's ARK. A turnaround in Tesla stock could help drive a rebound in ARK Invest performance, which has been pummeled amid a more hawkish Fed that's focused on raising interest rates to combat inflation. But then ARK Invest stocks could also see an even bigger reversal in 2022 because the thing about stocks is that while they don't go up forever, they also don't go down forever. And Cathie Wood stocks have fallen too far, too fast, too oversold, and undervalued levels with some major turnaround catalysts on the horizon. The question is, what are the components that will make up the 2022 rebound? And how are they going to influence an upward trajectory for Tesla? Well, the economy could potentially slow down in 2022, driven by plunging consumer confidence, a sharp drop in the household savings rate, rising interest rates driving up borrowing costs, and the end of stimulus payments. Consumer spending will fall flat in 2022. Consumer spending drives 70% of the U.S. economy. A consumer spending slowdown will naturally produce an economic slowdown, the likes of which will make healthy corporate earnings growth relatively scarce in the market. Investors will reconcentrate their investment dollars into companies that can continue to produce strong growth, and that might just be what Tesla needs. Furthermore, inflation is going to meaningfully decelerate this year. Inflation was the bane of Cathie Wood stock in 2021, but inflation rates will dramatically cool in 2022 as consumer spending slows, supply chain bottlenecks improve, and the year-over-year comps get much harder. Throughout the year, inflation rates will fall from 7% to 5% to 3% and will likely end in 2022 at around 2%. Accelerating inflation killed Cathie Wood stocks in 2021. Decelerating inflation will boost Cathie Wood stocks in 2022. What if Cathie Wood already has an insight into what the future of some of her stocks look like? The recent purchase of Tesla stock could just be the direction investors have been looking for. And maybe there's no need to worry about regulation because the Fed will be forced to take a dovish pivot by the summer. This is a data-driven Fed that has a history of only being hawkish when it's absolutely required. A hawkish policy stance will not be required by the summer. Inflation will be decelerating rapidly, economic expansion will be slowing, and the labor market will likely continue to struggle with shortage concerns. In the face of that data, the Fed will revert to a dovish policy stance, which of course will be a bullish development for growth stocks. All we're looking at is more reasons for Tesla investors to be happy. Now, what more should investors expect in 2022? Tesla shares closed higher on January 28th after an unusually volatile week in which the electric vehicle company posted fourth quarter earnings that, while better than estimates, gave at least a few Wall Street analysts grounds for skepticism over its ambitious 2022 goals. The automaker beat expectations during the final stretch of 2021 with double-digit revenue and gross margin growth. Tesla's sales will comfortably grow above 50% in 2022 compared with last year despite supply chain problems, thanks to their new factory starting up and current plants boosting output. Still, Tesla was fairly coy about the year ahead, with some market watchers disappointed that the company failed to articulate plans for a lower price model. Without concrete forward-looking plans, some analysts find themselves in the cautious camp and see headwinds forming to slow Tesla's momentum. Bank of America analysts were also anticipating more details on the company's timeline in ramping up production for the company's Austin and Berlin facilities. The bank notes that little definitive guidance was provided other than the current status in both plants, which was disappointing. Meanwhile, Morgan Stanley pointed to the Berlin factory as a source of concern. The bank believes that investors should prepare for the situation around Tesla's German factory to be potentially much more politically entangled than people realize. The bank further notes that the story of Giga Berlin is not just a Tesla growth story. It's a German labor and growth story, and with great advancement comes a degree of complication. Morgan Stanley warns that Tesla factories have been running below capacity for several quarters because of supply chain issues. The automaker also said that it wouldn't roll out new models such as the Cybertruck, the Roadster, and the Semi, all of which have missed their scheduled production dates. In a nutshell, the bank seems to think that this could be bad for investors. Nonetheless, there are some facts about Tesla that we just can't ignore. The company has performed way better than all its peers. Tesla's revenue rose to $17.72 billion in the fourth quarter, above analyst estimates for $16.57 billion. Tesla has fared better than most automakers in managing supply chain issues by using less scarce chips and quickly rewriting software. The automaker last quarter handed over a record number of vehicles to customers despite supply chain headwinds, and Elon Musk said that the company still expects to be partly or primarily chip limited this year. He said Tesla's volume growth would comfortably exceed 50% from last year, meaning that Tesla expects to deliver more than 1.4 million vehicles this year. And that'll be a huge improvement from 2021. So then there shouldn't be a cause for concern if Tesla manages that feat. We believe Tesla is going to do well in 2022. Let us know what you think via the comments section. Thanks for joining us today. Like, share, and subscribe. Remember to stay safe, and we'll see you next time right here on Stacking Stocks.